Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Henry Weingarten. Henry is the managing director at the Astrologers Fund. Welcome to back to Wall Street Silver, sir.
Thank you.
Yeah.
It's last day of the year almost, so it's an exciting time.
Yeah. Happy New Year to you and everyone watching at
Yeah,
Wall Street Silver. I wanted to get you on. You shared me some incredible slides that I want to share here with everyone at Wall Street Silver.
sure. And basically, slide one is just basically this is the fifth in a series. So if people like it, they may want to catch the earlier ones. And we also have a full hour and a half presentation that we've done on our website they can catch later.
This one's the
Okay,
annual stock commodity forecast right
right,
here, A fund.
correct.
Okay,
Yeah,
perfect.
good. Now, basically, when you're listening to somebody, they have their own biases. I'm a cosmic value investor, which means I like to buy low and sell high.
Hmm.
Basically, you, meaning the audience, should do whatever they feel comfortable with. At the moment, there are two ways to deal with the markets. One is extremely short term with a lot of market volatility, and the other is long term. If, for example, we're talking long term, silver is obviously very good. If we're talking short term, we recommended reducing at 34 because I think we may be going down to 26 and then we'd be rebuying. But it's really a question of how comfortable you are.
Hmm.
My basic approach to markets is threefold. The first is there are going to be a lot of physical and economic challenges in the next year and a half. And so, therefore, we tend to be cautious in what we do.
Hmm.
Secondarily, if, when, and we do believe it will happen, the markets panic, I want to basically have the ability to buy, which means I don't want to be fully margined. So we have to be, as long as you have money, that's fine to buy when that happens.
Right.
And the third thing is we believe that good stock picking outperforms index funds or even the physical.
Hmm.
And of course, index and physical have done very well this year, but we tend to outperform. So if we look at one of our favorite core holdings, which is Mag Silver, and we relate it to the S&P, you'll notice it outperformed. But if we look at November, it was up 70%.
Wow.
Versus only about 30%. Now, if you wanted to be very long term, you're going to hold it because I believe it's going into the mid 20s and another 2, 3 years, it'll be in the 40s. But if you decided to reduce a little bit there and then decide to rebuy, we think it will be down 13 or a little bit under, you outperform if this is comfortable for you.
Hmm.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
It says here Mag Silver versus Silver.
Now, here you notice at the beginning of the year it underperformed. In that time frame, it outperformed, but we believe next year it will definitely well outperform. So you have to decide. Basically, a silver producer like Mag Silver is like a manufacturer. They manufacture silver at basically 50 to 75% discount. I like to buy wholesale rather than retail. There's nothing wrong with buying physical silver and owning it, but you can make more money with less risk in many cases by having a quality producer such as Mag Silver.
Right.
Now, fundamentals do not matter the way they used to 20, 30 years ago. And the
Why
two
is
things
that?
that we're most, but at some point they do.
Hmm.
And the two that we're most interested in is, of course, gold and silver. And you'll notice my numbers are 2280 and silver 26 to 28, which means currently, as we're speaking today, at the beginning of 2025, both gold and silver are overvalued. Now, that doesn't mean they can't stay overvalued for many years, because for many years they were undervalued, if we
Hmm.
go back 2, 3 years ago. But
Right.
eventually, markets do conform to valuation. The others are
Okay.
less important for the audience, I think.
Right.
So, how do I determine gold's value? It has four primary drivers. As a commodity, currently, and these numbers change all the time,
Right.
it's 1986. As a currency, 2294. As an inflation metal, 2040. And please note, inflation is increasing. I just got my insurance bill up 30% this year.
Oh,
My
geez.
maintenance in my home is up 9%, and I don't believe the government's 2%.
Yeah, no,
Now,
absolutely not.
and the crisis is the issue because this is the key thing with gold. When we're in crisis, we will be close to 2,800. But if there's no crisis or less of a crisis, then gold is going to reduce.
Right.
Very important. However, we like to stay long precious metals, both as an investment and portfolio. And you notice our resistance of 28, which we gave months ago, was almost perfect to within a few dollars.
Yeah, it was
That's a
spot on.
decision point for us.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. It says we stay long precious metals both as investment
As
and the portfolio
yes,
hedge.
yeah. Mhm. But silver now is a little different. Now, many people have a target of silver for 40 next year. We don't.
Mm-hmm.
We felt that it would trade at best between 34 and 38. And you notice it traded at 34. This is when we called clients and recommended reducing. They didn't want to, but here we are now at 30, just under it. And we
Mm-hmm.
believe it's more likely to hit 26 or 28 than it is 32 to 34. Now, if we take a longer term horizon, yes, we think we'll see it. But if
Right.
you want to trade and make more money, you have to adjust. The important thing is this: if you believe, as I do, that there will be a global economic slowdown or recession
Mm-hmm.
over the next 18 months, this is not a positive for silver, which has two drivers, one of which is the economy. The other is without a geopolitical crisis, and nobody really wants that,
Right.
then on the short term, gold is going to retest support, which is currently 26, and that will bring silver along with it. Now, if you don't care about fluctuations of 10, 20%, okay, we did make 30% just holding. But if you want to outperform it, there has to be some adjustments.
Right.
And we feel there are three things we like at different times. One is gold and silver, of course, but we want to buy it cheaper. I don't like to pay. I like wholesale, not retail. So
Yeah.
we're going to be waiting for a retest. And gold can certainly break the 26 support and go to 2,400. Silver can go certainly to 26 again, certainly 28.
Mm-hmm.
And when it gets down there, if it sits there longer, then we'll rebuy. I prefer to buy it 24 to 20. Well, we bought mostly at 18, but I prefer to buy at 24 now than at 34.
Right. And these are
Um,
the three favorite A fund investment
Yeah,
ideas.
so one is gold and silver. Entertainment, it's a little early because if we go into a strong recession, then people will go higher on entertainment. It was
Right.
one gold and entertainment did very well during the depressions. We're not expecting a depression, but it will do well. And then we like having cash. Cash is not trash. Cash is income. There is some distress, but there's going to be a lot more distress in deep value than we see today and special situations. So you need cash for that. From an astrological viewpoint, which we go in detail a little bit in our 2025 forecast, there's something known as Saturn Neptune. Think of it as a rock on a cloud. And two images was the fall of the Berlin Wall,
Right.
and the other was the Briex disaster in mining, which, by the way, we called astrologically, got our clients out 2 weeks before it all happened.
Wow.
So this is something you want to have cash for, a higher amount than normal. So the part that most of your audience seems to have disagreed with earlier is we believe in a pair trade, that when silver is basically 34 to 38, we want to sell some of it and buy silver stocks. On the other hand, if we have plenty of cash, I don't have to sell it.
Right.
But we believe that if you believe silver and gold are going to go up, which I think we all do on a long-term basis, then
Absolutely.
you'll make more money with good stocks than you will just owning the physical. Now, if you own a bad stock, you have problems. So it hasn't been the case that's been there, but we believe over the next 2 years, it will outperform. So we think something like a max silver will outperform silver. Now,
Because
if silver goes down, it will go down as well. But over time, well, I'm jumping here.
hold
If
on,
it
hold on, let
come
me go
down to
back.
even if a 10% drop,
Right.
Come down one more time. Next slide.
Hmm.
If we jump to, no, up one. Sorry.
No
All
worries, no
right,
worries.
I'll take that point a little differently. So
Okay.
we see there are challenges economically. There's going to
Right.
be risk in the marketplace. We want to be cautious. We want to have the ability to buy when markets panic. That's very important to be prepared for. Don't freak out, be prepared. There'll be winners and losers if you want to do some homework, but this is the important point. Even if stocks and silver drops and gold drops 10 to 20%, which means they're still up for the year, initially the quality gold and silver stocks will drop more, but then over time they will rise more because they're still seriously undervalued because people are not paying enough attention to the silver and gold stocks.
And that
So this is
example
another
being,
point people should think about.
and that example being like mag silver.
Yeah, as one example. And so the other thing is that if you're a trader and you don't have to trade all the time, like the last 2 years, you're going to outperform because the market's going to go up and down, up and down. The primary reason is initially they're going to say everything's good in the economy and it will be a slowdown. That's a good slowdown, which is not true. Somewhere over the next 18 months, boom. Now, maybe next month, we recommended selling at the end of the year, which is doing very nicely now. We give some details later. So if you're an investor, you keep a long horizon. Warren Buffett said, forget thinking about a year, make it 5 years. So if
Right.
you want to look at silver or gold for a 5-year horizon, you're going to be in good shape.
Right.
Okay, so basically we go into some great detail in about an hour and a half. This is only like 15 minutes. So if you go to our YouTube, you can go through it and at your leisure.
And you'll have a full
Because
hour, hour and a half
it's
of,
an hour and a half, but you can break it up, just stop it and go on
right.
because there's a lot of material to cover. But the real question is, how do you want to handle the short-term volatility? Do you just want to ignore it, which you can
Hmm.
do? Do you want to trade it and make some more money? Or do you want to hedge it? We like hedging it and not ignoring it, but we don't want to do it all the time because then we'd be stuck to a computer screen and wouldn't live our lives. So
Right.
it depends on what you're comfortable with. So why
Right.
don't you ask me one or two questions before we run out of time that you
So,
may have?
I just wanted to, take a look at now that we went through all those slides, what do you think, beside, put this the slides to the side,
Right.
do you think that the fundamentals for a lot of these producers are going to be good, or you have to actually pick the correct producer?
Unfortunately, you have to pick the correct producers because traditionally, especially in the gold stocks, less so in the silver stocks, these people chased the quantity of the metal. They didn't care about the price. Now, today, more and more of the companies, and we list some very good ones in both gold and silver, are paying attention to fundamentals, but a lot of them were just buying at any price and performed extremely poorly. Now, you can buy an index that will do a little better than the physical because but then you're buying some things not so good along with the very good. But you may not want to do that extra work. It's a lot of work. Or you can take the recommendations of experts like myself, but there are plenty of others that you can pay attention to. There are a lot of good um, money managers and good newsletter writers that if you follow one you like, you can make more money that way. Because again, it's a lot of work, and you may not want to spend that time.
Now, do you personally recommend the explorers or the producers?
That depends on your risk reward. If you're conservative, then you want a producer. If you like to do like I do, I'm a cowboy on my own. That's for me personally, not for my clients. But if you're a cowboy, I like to take five in a basket and think one of them is going to be a home run for a bagger, occasionally a 10 bagger, and one is going to go bye bye, sorry, and one or two are going to wait 5, 10 years and go through some situations. But overall, it will get a better than a 20% return by putting it in the basket. Because if I only just take one, it's hit or miss.
No, that
So
was
I like to
phenomenal.
diversify. Yeah.
Yeah, those slides are really incredible to look at because you're not looking at because a lot of people they have their own bias, like what you were saying at the beginning, but you look at a different lens.
Mhm.
So that
Well,
so
I
that
think so.
that's a yeah, that's a nice that's nice
Well,
to look at that.
see, when we were money managers, in fact, every money manager used to, what did you really promise? You promised somebody to make more money with less risk. That's what you're trying to do. So the
Right.
question is how much risk you're willing to take. And people always say, oh, yeah, I want it, as long as they're making money. When it goes the other way, uh-oh, I didn't want that. So you have to decide. And that's why we like a balanced portfolio
Yeah,
so
no,
that you can. And there's another second difference with market professionals versus individuals is a market professional very often can make money whether he's right or wrong about the market, the
ah,
broad market,
right.
because he doesn't marry the stock. He won't hold it forever. So if a stock goes up 3 times and then comes all the way back down, he'll have sold a little bit of it and come back. I'm not saying to sell all the time because otherwise you miss things as well. But
Right.
there's also some balances. But the trick is whether you can make money when you're wrong.
Yeah, no, that's an incredible piece of advice. Henry,
Yeah.
it's such a huge pleasure having you come down to Wall Street Silver. I am going to put the links in the description below, so people can go see your hour-and-a-half seminar and all the other links to your social media.
Thank you very much.
Yeah, and again, I wanted to say Happy New Year to everyone and Happy New Year to yourself, and I'd love to have you back on to continue this series.
We will when in about a month or two when silver's a lot lower, so I can say buy. It's a great buy. I was
Hey, you're
I
like, I
want to be
told you
I
so.
like being on the longs. By the way, like even recently with gold and silver, I basically want to sell it, but I just won't do it emotionally. I mean, that's the difference between me and a
Right,
computer. I
right,
know it was going down from 34. I was willing to sell a little bit, but I wouldn't sell it a lot because I know long term it's good.
right, right. No,
So I want to come in when it's really low and I say now you really got to pound on it and buy.
no, that'll be perfect.
That's coming. That's coming. Don't worry.
Yeah, I'd love to have you back on in a month. And yeah, thank you again, everyone, for watching. And really, I appreciate you coming down, Henry.
Sure. My pleasure.
Talk
All
to
the
you
best,
soon.
everyone.